Good day, everybody. Chris Herline here of Reap Financial. Welcome to today's Wealth Report. It is Friday, August 16th, 2024. I want to jump into what we've seen in the markets the last couple weeks here in August. And, investors, they don't like to be surprised. And they were hit with several surprises in the last couple weeks, and substantial changes in the stock market prices followed. Last Monday, the stock market literally had its worst trading day since 2022. And it seems like it came out of nowhere, and it had a lot of investors concerned. And I think it's important to address what caused that decline. One of which was a major surprise with a new policy by the Bank of Japan. Many investors don't know this, but Japan had the top performing stock market in 2023. Plus, the yen declined against major currencies in 2023 and continued to fall in 2024. So to support the yen, the Bank of Japan recently increased interest rates and announced it's going to take other actions to support their dollar. This took global investors by surprise. They were profiting by borrowing at very low interest rates in yen and investing the loan proceeds in Japanese stocks and other assets. Another key reason is employment situation reports in the United States came in well below expectations. That also intensified the changes. Another reason was disappointing earnings reports that recently were issued by some of the major growth companies that dominated the global markets the last few years. So for the last year and a half, investors have been really optimistic that inflation would decline without causing a recession, and the stock market leaders would continue their rapid growth. But suddenly, with last week's decline early in the week, all of a sudden everybody's talking about the potential for recession and declining earnings. So all these events made it seem likely that the yen would rise further against the dollar, and this just caused more investors to unwind their positions. When the stock market falls like it did last Monday, it feels like the sky is falling, particularly when we see the market leaders that have driven the S&P 500 fall so dramatically. And I think it's a good reminder that the stock market can fall faster than it goes up, although we're very vigilant in the investment approach of our clients' wealth. We don't make quick decisions. We don't make emotional decisions. We look at the data. And the weakness in the U.S. labor market is a long way away from a recession. We anticipate the economy will continue growing, however, likely grow at a slower pace. When we see a decline like we saw last week, believe it or not, that recent event actually enhances the case for expecting a broader rally in the U.S. stock market. With all the concern in the markets early in the week, it's hard to believe, but by the end of the week, the markets had almost fully recovered. We have many clients that manage their own wealth on the sidelines as well, and it's these moments where we encourage you to stay grounded and look at the silver lining. Last Monday's significant decline in the Big Seven likely was an incredible buying opportunity. And a lot of investors out there, they don't have a lot of money sitting on the sidelines ready to deploy when a buying opportunity comes. Prior to last week's volatility, the stock market has displayed banner performance here in 2024, where we've seen the stock market go to new highs time and time again. And the main reason for that is U.S. earnings have gone up so much more than the rest of the world this year. I firmly believe that declines like this just further reiterates why you work with our advisors at Reap Financial. We're here to help you make smart financial decisions that are grounded in data, not emotion. And we believe that you're very well positioned as we head towards the back end of this year. If we need to make changes, we will be in touch to do so. If you have any concerns or want to meet with your advisor, never hesitate to reach out to set up a call or an in-office meeting. And rest assured that we're watching everything very closely as we head into this election cycle. As always, thanks for taking time to tune into our wealth reports. We'll be back with you in the next couple weeks. Until then, all the best to you and your family.